What's going on, everybody, and welcome back to another episode of Technical Analysis Academy. My name is Matthew Brienen. I'm Chief Operating Officer and co-founder at CryptoCharge.com. We're a cryptocurrency education company. We cover everything from macroeconomic news to technical analysis, curating nothing but the absolute best news you need to know about each day, letting you know about upcoming economic events that could affect your investing, and of course, a fully stacked coin library discussing some of our favorite coins, where to buy them, and when to buy them. Today, I want to talk to you guys about Fibonacci's. And Fibonacci is a theory created by an Italian mathematician, Leonardo Fibonacci. And essentially, the sequence goes as follows. It's simply adding the numbers from the previous values together. So let's go ahead and pull up that chart now. And if we can see here on the example, the sequence goes 1, 1, 2, 3, 5, 8, 13, 21. But you can see how we garner those numbers. 1 and 1 is 2, 1 plus 2 is 3, 2 plus 3 is 5, 3 plus 5 is 8. So it's a very simple sequence for you guys to memorize because you can just look back at the two previous numbers and add them together, and that will give you the next number in the sequence. Now, Fibonacci's are found in all kinds of things. Fibonacci's can be found in nature, in seashells, in hurricanes, in our human body. The distance between your wrist and your elbow is the perfect ratio, 1.618. There's a lot of ways that we can look at Fibonacci's, but the way that I use Fibonacci's is within charting. And when you understand that Fibonacci's are just ratios, whether we're looking for an expansive ratio or a fraction of a ratio, we're still using the exact same sequence. And luckily for us, we have tools like TradingView.com. And TradingView.com is probably my favorite piece of charting software. You guys can check it out. I'm not sponsored by them. I've just been using them for about 5 years now. Absolute best piece of software out there. The premium version runs about $12 a month, I believe. But what they have in here is all kinds of pre-made tools that you guys can use. So over here on the left side, we're here on a Bitcoin price chart. On the third tool down, we've got our fib retracement. If you don't see it there, you might have something else selected, but it's going to be the first one up here. You can also type Alt-F to get into this more quickly. So I'm going to show you guys just what it looks like, and then we're going to get into some of the settings, okay? So if I wanted to plot one of these, I would just click one time, and then I'd click a second time to essentially plot it. So ignore everything that's on the screen right now. I'm going to show you some settings that you need to adjust in order for your Fibonacci to look like mine. So I'm going to click on any one of these lines here, and you can see there's a toolbar that was presented. It's right here. There's a little gear cog here. I'm going to click on that, okay? So the first thing that's going to be on your chart is this trend line. And I don't like a trend line. If you want it on, it's going to just show you from where you drew the top of it to the bottom of it. That's not necessary, and it's added clutter to my screen. So I turn that off, okay? You can also extend the lines all the way to the left, and you can extend them all the way to the right. I do encourage you guys to turn them all the way to the right. But again, this is just personal preference. It will not affect the values that the Fibonacci produces once you select a range. Now, there's a couple of key things in here that may or may not be a preset on your software. First thing is I want to have a 0 on here. That shows the low of the range. So when we select a Fibonacci range, we're looking for a swing high of a period and a swing low of a period. So let's say that we saw that a stock was trading around $20 per share, and we see that it made a bottom right around $7 per share. So the high of the range would be $20 and the low of the range would be $7, okay? So that 0 represents the bottom of the range, and this 1 over here represents the top of the range. I make these red for the top and blue for the bottom just so I can clearly have definition on my screen of where I selected those parameters, especially if I'm working maybe with a larger piece of price action, okay? Now, not all of these numbers can be plotted on here, and not necessarily all of you are going to want all of these extensions plotted on here. So you're going to see a combination of both fractions and whole numbers. So you can see, for example, 0.382 here would represent 38.2% of the total move. So out of the 100% move, it'd be the equivalent of moving 38.2% back in the opposite direction. Same with this next example, 0.618. That would be the equivalent of moving 61.8% backwards of the total move. So if I was running down the street and I ran a mile, I would run 61.8% of the way back, and that would be the exact amount that I ran backwards, right? So that would be a retracement. Now there's also the extension portion of this. And we just saw the Fibonacci sequence, right? It's simply adding the next two numbers together. Beyond the retracements, which are fractions essentially, right? Ratios with fractions, we have extensions. And extensions are the values beyond the top value of the range. So we know that 1 is the top. So again, that stock is $20. But we want to ask ourselves, how can I predict prices in the future? How can I pick out my targets using these Fibonaccis? Okay, so plotting all of these things on your chart is going to help you get there. You're going to have all these things here by default. A couple things you're not going to have is the 702 down here. So 0.702. And you're not going to have any of these extensions on here, especially anything beyond the 4.236. So I've added other numbers in the Fibonacci sequence, and you can choose how many you want to add, but I added the 8, the 13, the 21, the 34, 55, 89, 144, 233, and 377. I like to have these on my chart because I do a lot of teaching, and I want to show over long periods of time that these can be powerful indicators of future price performance, okay? One thing you're also going to want to do is click use one color down here. You're going to switch them all to black so that all of these lines go black, and then you guys can just change the 0 and the 1 to colors of your choosing so that they're really clear and obvious to you, okay? So now that we've kind of gone through the aesthetic setup of the Fibonacci's, I'm going to go ahead and delete this here, and we're going to plot an actual Fibonacci range. So we're here on the Bitcoin price chart. This is a 1 week chart. So every one of these colored candles are worth 1 week's worth of activity. So if it's blue, it went up. If it's yellow, it went down. On your chart, it probably has the traditional green and red. It's completely irrelevant what color you guys use. That's completely up to you. So what I want to do in this example is take you guys back to a very early piece of price action for Bitcoin, okay? So let's, for example, look at this piece of price action over here. So we just talked about at the beginning, a swing high and a swing low of a period. And it's kind of hard to decide what that swing high and swing low is right away, as we don't know exactly when the bottom is coming in, but maybe when you see a double bottom or the market starting to move upwards from an area, that it might be an indicator that some sort of bottom is in. But because we have historical data here, and this is an example, we're going to select a very clear swing high and swing low. So I'm going to select my Fibonacci range. I'm going to click one time at the high of the period. You can see over here, this is the high. I'm going to click one time down here at the low of the period. You guys can see that it's down here, right around $162. Okay. So the first thing we're going to acknowledge and take a look at here is how price respects some of these retracement levels on the way up. As we work our way through these retracements, meaning the fractional ratios on the way up, that price tends to reject from them and kind of take breaks and pulls back on the way up, and even uses it as support and moves significantly higher, okay? One of the biggest things that you can do in Fibonacci theory, especially if we selected this range, right? I got the swing high and swing low. Let's say we're back in a time machine. I'm back in 2015. I see that the market's bottoming a bit. I like the prices. I think this is a good price for Bitcoin. What I'd be looking for is a clear break over some key levels. And that's going to be this cluster up here, these three prices. The 618 through the 786 are going to be the ratios where professional traders will short a asset, whether it's cryptocurrencies or stocks or oil or whatever. This is where they will look to short. And the reason they do that is because prices generally don't go beyond 70 or 78% of their total move and continue higher. If they do break above, that's a signal that prices are about to emerge on a much bigger bull run. So it gives you an opportunity to either position yourself to get short over here, or look for a break over these levels and say that price is going to continue higher, right? So in this example, let's say that we had done some accumulating. We said, okay, down here is a pretty good price, even all through here. So I'll buy Bitcoin between $270 and $400, right? We're not going to catch the bottom, but we see a bottom forming. We've selected our Fibonacci range. I'm comfortable accumulating in this area, okay? Now, let's say I don't think that we're going to get rejected from the 702, and I see that we're setting up for another bull run. So what I would do is, again, all I did was select this range from swing high to swing low. Even if all of this price action on the right side was not available to us, the extensions I'm about to show you are mathematical equations and would have been plotted even without any of these candles being produced. It is completely irrelevant to the action that's been printed here. So if I look higher, we know we have the 6.618, but we have the inverse, which is multiplication, 1.618. Look at this. We break out. We use this as support, right, to move higher. We break out, we retest the 2.618 as support to move higher. We exceed a 4.236. This is an area that most traders will look to take profit between a 3.618 and a 4.236. It is considered a full extension. But it doesn't stop there, right? Because we added additional Fibonacci extensions beyond just the 4.236, right? So I added the 8 up here. You can see that we interacted well with this level around $8,841. You can see over here that we basically just pierced above the 13. We're unable to use the 13 again as support over here in 2019, but then broke back through. And look at this. Bitcoin reached out to a 55 extension. And these are just Fibonacci numbers, right? It used the 34 as support over here. It's currently using the 21 as resistance. So when we pick a solid swing high and swing low, and I'm talking about this from a cycle standpoint, meaning that we selected a swing high of a period to swing low. So if you find a 1 or 2 year period of price action and there's a clear swing high and swing low that come in, that's an indicator that you've selected a very good range, okay? And it can be a very good indicator of future performance. So this even suggests that Bitcoin, based on these Fibonacci's, gets up to $150,000, $250K, or even $409,000. And of course, this isn't all at once, right? We can see even through here that, where did this range start? This range started back here in 2013 through 2015. So, and we're in 2022 now, right? So this took time to play out. It doesn't get there all at once, but it shows us where price could go. Let's remove this. Now, let's select a different swing high and swing low, right? We know that that's a valid range. It showed itself over and over again as a valid range. Let's go ahead and select this swing high and this swing low over here. So what do we see? So we see, first of all, a retest of the 618, which I showed you guys this cluster, right? Between the 618 and the 786 is an area where professional traders will look to short an asset. If you were shorting this asset right from the 618, you would have made a lot of money on the way down, right? Because you can make money whether the chart is going long or short. But when we do break over the 702 and we use it as support, prices move significantly higher. And look at this. Using a different range, we almost pinpoint perfectly nail the 4.236. And as we just discussed, between the 3.618 and the 4.236 is where professional traders like to take their profits. And you can see that this was almost a perfect full extension here on Bitcoin, okay? Now I'm going to show you guys one more example. We're going to actually look at the XRP price chart. So let's go ahead and pull up XRP here. I'm going to remove everything off of the screen and we're going to look backwards, okay? So looking at this chart, a little less price history than the Bitcoin price chart, but nonetheless, we're going to look at it the exact same way. So over here in 2013, clear swing high, right? Over here, 2014, 2017, clear swing lows. So I'm going to grab this swing high and I'm going to grab this swing low. And look at this. So first of all, let's ignore the extensions up here. Let's look at just the retracements. Although we didn't come in for a 618, you can see that after making this high over here in 2014, that we came back in and nailed the 382, which is a retracement level. Now, it's not an area that I would have shorted from. I would have not got this opportunity, but you can see that the levels are still well respected. Now, you can see that we contended over here, pushed up over the 786, pulled back down to the 50%. And this is what confused a lot of traders, thinking that maybe we were rejecting and spiked over the price, but it actually was a full breakout. And XRP goes on to do this absolute monstrous move. Look at this, nailing to perfection the 55 extension. You guys can see over here, $3.23 was predicted, not by anything else, but from this swing high from 2013 to the swing low over here in 2014. The numbers over here would still have been produced even when all this price action did not exist yet. It is a matter of ratios, fractions, okay? So when we look at this and we see where price is now, right? We even came in for a retrace over here, perfectly nailing the 34 extension at $2 or just under $2 and then coming much, much lower. So you can use this in a number of ways, right? When we find a solid range like this, we can see lots of examples of it being respected, the 4.236 using as a floor of support. And we see that over here, it was used as an example many, many times. We can say that this range, just like Bitcoin's range, is going to be valid at some point in the future. So that means that $3.20, $5.23, $8.47, $13.70, and even $22.17 are completely plausible and supported by Fibonacci theory. Now, of course, just like any theory or indicator or anything you want to use, there's going to be times where they're invalidated or where you select a range that wasn't the range that was the most valid. But when you select a very large time frame like a weekly chart, you're more likely to get an accurate range that's going to guide you for either long-term or short-term investing. We're going to be doing more lessons on this with practical applications on smaller time frames to use these on swing and day trading, using these both the way that we showed you now, swing high to swing low, but also swing low to swing high, and how to use those to your advantage. If you guys are interested in our course and learning more about this alongside of us, having access to our Discord and be able to ask questions, join us at cryptocharge.com. Use code TA Academy. That's TA Academy for 40% off. We'd love to see you guys there. Until next time.